Prateek Agarwal is with us, Business Head and Chief Investment Officer, ASK Investment Managers. Prateek, good morning. Good to have you with us here. Thanks very much. The market is increasingly extremely ranged every day. 30 points, high to low yesterday, 50 before that. Prateek, what's going on? Lack of interest, nothing to do? What's happening?
Yeah.
Or bracing for something bigger?
No, so, if we do not have, for example, a good monsoon, a GST kind of an event, we really believe we are nicely priced. So between now and end of the year, one should expect to make, let's say, 6 to 7% on the index. So it's slightly less than 1% a month. So if that is the kind of return expectations from the index itself, it is but okay for the index to trade in a narrow range.
Is it also, as somebody put it, sentiment is great, mood is bullish, but in a way, I mean, I'm obviously generalizing this, but there is little to buy. I mean, there's nothing to buy. Not nothing, but because what is good, what is doing well has been bid up quite a bit. Generally, market is pricing a lot of good news. So one may be bullish, but what do you do?
No, so correct. So that is the reason why markets are trading in a narrow range. Our expectations is that the range sustains and we could see higher levels, but for that we would need well scattered monsoons. So, basically you have to have events that increases the long-term earnings growth of India Inc. So monsoons do that. Consumption part of the economy look better. Government is able to refocus finances and maybe some bit of capex also benefits. The other thing is clearly GST. So if logistic costs go down, earning estimates move up. If taxation goes down, earning estimates move up. So GST rates are 18% versus what most consumption companies pay, around 24%. So, we need these kind of events for earning estimates in future to be moved up, and hence markets discounting that in the present.
I mean, so I guess you'll need some solid evidence of monsoons as well, right? I mean, that we won't get before July in terms of how rains are progressing, etc., which is actually a validation of the rally that we've had already.
Yes.
Okay. What are your thoughts on Tata
GST
Motors?
Will be the big one that markets are actually looking at.
Sorry?
I said
Prateek, what was
GST
that?
is something that is a big thing for the market. It moves up earnings estimate. Yeah.
Okay.
So
I think
there is some
people have
lag
kind of forgotten about
in the
GST, but you're putting that back on the table firmly. That GST in the monsoon session is something that people are looking at closely. But we'll see. All right. There's about 40 seconds to go for the market open. I want your thoughts on a variety of sectors, themes, etc. So why don't I ask you quickly about Tata Motors and the latest sales numbers that we have from JLR. Q1 is seasonally not a great quarter. Stocks are about 12 times. It's up 60% from the lows. What's your view?
One, we are positive on autos. They should do well given the fact that consumption story stays strong. Margins stay high. Tata Motors in particular is more outside India story rather than Indian story. There the numbers that have come are actually slightly better than expectations, so the trend there stays good. Some of their models are weakening, they need to be refreshed. But overall, the trend stays stays good and strong for that company. The big challenge in Tata Motors is the capital intensity. It is way higher than other Indian listed auto companies, and hence to compare India focused auto companies valuations with Tata Motors is probably not correct.
All right, market open. Let me just quickly address that, Prateek, and just come back to you. By the way, the Nifty is down about 19 points. The Sensex is down about 80 odd points or so. So that is basically about a 0.25% lower on each of the indices. I just want to take a quick look at what else is happening as far as the Nifty pack is concerned. BPCL is the top gainer, 1.25% higher. Tata Power is up 1%, ONGC is up under 1, NTPC is up 3/4, Z is up about 0.65% as well. 25 stocks are higher, 26 stocks are lower. Lupin is down 2.25%. It's the biggest loser right now, 1398 on Lupin. Infosys is down about 2%. Dr. Reddy's is down about 2%. HUL is down about 1% or so. So that is the overall picture that one is working with. Infi down about 2.33% right now. So that is seeing some correction along the way. I think along with Lupin, it ranks as the top loser so far. But we'll just have to wait for it in terms of news flow or anything. Alchem Laboratories is something that we put out news on, and Alchem is down as well. And we'll look at Dr. Reddy's as well. So Lupin, the news was that there was reports that it has recalled antibiotic injections due to deviations from GMP, good manufacturing practices as per FDA. So there was a recall of antibiotic injections for Lupin. That is the news on which this one is reacting. But this is large caps as far as opening is concerned. BPCL is up 1.75%, the only meaningful gainer. That's it. Otherwise, it's pretty staid. Infi, DRL, Lupin, HUL, ITC, HDFC are the top losers. I mean, but except Infi and DRL, I mean, maybe Lupin, there isn't very much but by way of sharp cuts or pressure or anything of that sort at all. Let's look at the broader markets, and if you can put these stocks up quickly. Suzlon is up 3%. Pankaj is pointing out Tata Global is up 3%. Tata Global was up about 4% yesterday as well. So, I mean, that is adding on. Eros International, it's, they've tied up, and Eros now is launching an Apple TV. The stock is up about 6%, Eros. Kane is up 2%. That is Kane India. Eros is up 7 now. Phoenix Lamps is up about 5% or so. So I think Motilal Oswal Asset Management bought some shares in a bulk deal yesterday. Phoenix Lamp on your screen is up about 6% or so right now. So this is the overall picture that one has got. I'll put out more names in a bit, but let's go back to Prateek. Prateek, so what is your view? You said that comparison with global makers, etc., would not be fair for Tata Motors. But given where it is trading, the opportunity, would you say it's a good stock to bet on? It routinely ranks as the number one recommendation among sell-side brokers. As an investor, what's your view?
No, so instead of comparing with Indian auto companies, since a lot of the value of this franchise comes from offshore JLR, it is better to compare with European auto businesses. And there, if you compare the valuations of this one, compares frankly favorably with the others, except that this franchise is growing faster than the other franchises. So that kind of sums it up. Extremely cyclical business. So as of now, it is in a sweet spot, but one needs to be careful there.
Okay. Prateek, now your thoughts on what we are seeing as far as government-owned, cash-rich public sector companies are concerned. So now reports are suggesting that we might see a government announcing a large buyback, Coal India announcing a large buyback. We don't know, I'm just saying large potentially because others have been meaningful as well. The others have been MOIL, NMDC, NALCO, right? the price at which the buybacks have been announced in out of the three that are named have been pretty close to the current market price, which means that the government is likely to be the sole seller of shares in these buybacks. Cash, as a result, there is a significant cash outflow out of these companies. And there are changes because of that. Earnings, finance income goes down, etc., etc. Cash on the books, which is said to be a buffer for these stocks, that goes down. We are now hearing the same thing about Coal India as well. As an investor, how do you see these buybacks? Do you see that as these buybacks taking away the overhang of a stake sale at some point in the future, which may have happened, or do you think, well, these are negative because cash is getting depleted and at a pretty fast pace?
I worked on buybacks in the past in my earlier outfit, advised, frankly, some of the government companies as well. So the government companies have a very clear-cut role. They need to be able to justify use of cash. Okay, so it is not that they are favoring one investor over the other. It is, if you are keeping cash in the bank, what kind of returns you are making. If you are deploying it in business, what kind of returns you are making. So assuming that you can't deploy more in business, the next best is what you get out of keeping it in bank. And then compare that with, let's say, what happens if you do a buyback. Okay, if you do a buyback, then does the EPS increase or does it decrease? So a lot of these considerations actually limit the buyback price that a PSU company may propose. It is a policy to believe that these companies will propose a price which is higher than what is the traded value today, because it is cheaper than fair value, etc. Those considerations may be there on the side of the media, on the side of the people recommending this solution, but the fact of the matter is the companies themselves take an extremely hard look on the alternative uses of cash and how or whether it increases shareholder value over the medium to long term. And as soon as you put all of that into a parameter, you find that these companies, PSU companies, generally would buy up to a price that really makes sense for all shareholders, not one shareholder. So they would almost never be value destructive for minorities. They would always be fair to all.
Right. So that is fine, but that's a very rounded up answer about the process and the considerations that these companies use when announcing these buybacks, when doing these buybacks or deciding to go in for them. But as investors, how would investors view this? Would they see this as a way that government is reducing stakes in these companies? So there is a positive, it is a negative. What? I mean, how do you see it?
No. So it's a positive for the market. From corporate sector, the monies are flowing to the investor class without changing. If monies go back to investors, they can probably use that money to buy some other business. So overall, it is good for the markets. But if one takes a view that most of these monies would go to the government, then that goes to fund fiscal deficit and immediate improvement on the market may not be seen. However, it does remove the overhang of fresh paper supply into the market, which in the past was seen to depreciate the prices in a very, very awkward manner. So earlier, a government company would come and say they want to do a fund, they want to do disinvestment, the market would thrash down these stocks, looking at the fresh supply of paper that would come in. And then even if the government walks away, the stock prices almost never came back up. So it has been that kind of a situation. I think buybacks, are a good way of breaking this vicious cycle. So good for the pack, good for the market, and I think good for the government as well. What it also does is, yes, takes away the hangover of further government sales. Government finances are improving versus last year. This year is better. Given the buoyancy that we have seen in the first 2 months, maybe the next year would be even better. So the need to disinvest PSU businesses to fund fiscal deficit may go away, while they may still do it as a matter of policy. But the need to do it to fund fiscal deficit, and hence the need for it may just about reduce.
Okay, fair enough. Got that. I mean, Coal India, in Coal India's case, the government owns just under 80% in the company. I mean, if it were to essentially sell down to say 75%, hold 75% stake, it would need about 40,000 crores or so, which is about 75% of its total cash balance. That is very significant. But as Prateek said, you'd have to look at the pros and cons. Number of shares reduce, finance income goes down. I mean, what's the net impact? Because it will, at the end of the day, have an EPS impact as well. But one thing is there, Coal India, unlike say NMDC, doesn't have any large capital projects lined up where there is need for cash. So we'll see. Because if it is a 4-5% kind of reduction of stake, that's a pretty large. It'll be a pretty large one. The quantum will be pretty large. Will it be that large? One needs to wait and watch. So that is one area in focus. Let's look at the Nifty and the Sensex once again, please. 75 points on the Sensex. I think the Nifty is lower as well by what? 15, 20 points? Yeah, 20 points. 82.54. We've got a few other stocks that I want to put out. So Pankaj is pointing out MMTC. The stock is up about 5%. There's a buyback on, Pankaj? Yeah?
No, the buzz of buyback.
The buzz of buyback, okay. MMTC on your screen. There are other tea stocks. We put up Tata Global earlier. So Jayashree Tea, McLeod, Tata Coffee is also moving up. We'll look at these names, Jayashree, McLeod. Gati is up 3%. Gati was up $10. So again, GST buzz or whatever, I don't know. But I think Gati is back at 150 or so. Tata Metallics is up 5%. So that will come up. So it's up 200% in the last 1 month. Siemens is up 4%. It was up 4% yesterday. It's up another 1.5%. New 52-week high for Siemens. SKS Microfinance was up 3% yesterday. It is up 1.2% at this point in time here right now. So again, I mean, a sampling of what is happening across the board, across the market right now. Prateek, any themes that you are working on which look interesting?
Yeah, so at this point in time, we do believe some of the larger pharmaceutical names look good. So that's a space that has corrected considerably in terms of PEs for 18, 17. Compare them with some of the other sectors, names which are seemingly doing better in the same sector, and one would discover that the largest names may be offering better value versus some of the buzzing names in the market today. So I think that is one space that we are getting clued on. Not that we did not have exposure there, but yeah, we do believe that's a space that can do well. Second, agri-chem is a space which has been doing well, and I do believe, given the fact that monsoons are expected to be good this time around after 2 years, that's a space that can do still well going forward. Also, one has to remember that last year was a terrible year for agrochem companies on a global basis. So South American currencies went for a turmoil, and that impacted even global players quite a bit. This year, as stability is significantly better than last year, global agchem business outlook also looks much better. So companies which from India which are focused on the global space should also do well. So this is a space that we really believe should do fine.
So essentially talking about crop protection companies, right? Pesticides, insecticides, fungicides. I mean, those kind of companies.
Yeah. Yes.
Okay. All right.
Yes.
So large cap pharma and agrichem stocks. And obviously it would be prudent to imagine that you already own many of these stocks, but you're saying that even here these stocks look good.
Yes, we own a lot of these, and we do believe even here they look good.
Okay. What else, Prateek? Anything else?
No, so rest of the stuff stays similar to what we discussed last month and the month before. We continue to be focused more over consumption than capex. A lot of the things which are happening in the near term are definitely favoring consumption. So be it PSU wage increases, be it better monsoons, be it the fact that GST may be around the corner. So all of these actually benefit the consumption part of the market on the margin. Apart from it, the fact that Government of India in its stated policy is expecting to reduce incentives for corporate India and bring down taxation from 30% to 25%, or rather bring it up from 20% to 25% for most other companies. Consumption companies, which are today the full tax paying companies, actually benefit in the whole scheme. So I think we continue to be focused there, and that's a part we believe even today provides the maximum earning certainty and high growth going forward. There is another way of looking at it as well. Because of the low inflation scenario over the last 2 years, many of these businesses, one way to look at it is they have not cut prices. Okay, so paint companies, gum companies have not cut prices over the past 2 years, and hence their margins are so high. But de facto for the consumer, they have not increased prices for 2 years. Now with inflation coming back a bit, our belief is that some of these businesses are very nicely positioned to improve pricing a bit. The way the products are sold, actually the application of these products, on the human side, the prices have gone up, but the product itself has not become more expensive. So the ability of the manufacturers to increase product prices in a slightly inflationary scenario after 2 years of keeping prices nearly constant, to our mind, should be very high.
Right. So, I mean, revenue growth also picks up a bit because of because WPI picks up from here, and you're saying that prices can also go up, so margins can also be better, right? Generally. But these would be typically what kind of companies?
That is where we are sharply different.
Which specific areas?
Margins.
You're not talking about staples, obviously.
No, I said so I was talking about paint companies, adhesive companies, companies which otherwise look pretty expensive, on valuations, and there is this disbelief on the margins that they have, just because they are all-time high margins, and the companies do keep coming back and saying that the margins are not sustainable. But frankly, if you see what is happening in the marketplace, price cuts are still not happening. They continue to report higher and higher margins every quarter. And with the macro supporting them, I think the ability to move up pricing is higher, and that kind of implies that margin sticks where it is, or there may be a case of moving it a tad higher, especially since competitive intensity has not resulted in any undue pressure on pricing from any of the large market participants. So that is basically our view. Very, very interesting space to look at. Plus, the same space benefits from B2C businesses with strong brand pulls is the space where retention of GST benefits, if any, can be of an order higher than B2B businesses where we believe all the GST benefits would have to be passed on.
Prateek, it's a pleasure. Thank you very much for your time and good perspective as always. Thanks very much for coming on today.